Good evening, everyone. Time for another silver update. This is the 5-minute silver chart provided by netdania.com. You can click on the link below. Now, we've been following this. This is a compressed view of the trend line that we'd been watching, but you can see that the trend line had come down, and we were definitely getting towards a point of resolution for this formation. And my prediction was that if we moved through this, we would get a move probably in the dollar or dollars. We did get a move breakout to the downside. You can see clearly that once we broke, we had a pretty significant move to the downside. The bottom that we touched was 31.1. So if we go out, well, I'm going to wait to go out because I'm going to lose these lines, but the other line I've drawn in here is the accelerated downtrend line. That's going to cross the price here at 31.70, so that's going to be the price we need to get through to put some kind of bottom in. Then of course 32 is going to be the next one, and then we're going to have this 32.30, 32.50, etc. that we need to get through. Are we making a bottom? I don't know. I started nibbling today. I usually get a feeling when we start to drop dramatically, and I just start nibbling at things. So I wanted to share with you, it's actually what I covered last night, and so I picked up a few of these 2012 1/2 ounce Australian Lunar Year of the Dragon coins. I did a little bit of research before I did that. When I picked them up, there were 1,800, and there are now 1,453 of these left. One of the reasons why was that the 1 ounce of this coin is going for $74.99. Now they have 8,000 plus left on APMEX. So if we go by this, now if you remember when this came out, it was a very interesting issue because it was locked up by all of the pre-orders, and initially they were selling for 150 a coin. They dropped down to 100. You can see they're down to 75, and APMEX still has quite a few of these. One of the articles that I found when I was researching it is that they had actually put the 1/2 ounce and the other issues on hold. That was back in September 2011, and they did a freeze on those so they could mint enough of the 1 ounce because the demand was so high. Of course, these issues are limited by the Perth Mint intentionally for the stated purpose of maintaining their numismatic appeal. People have questioned that. Now, there was a thread I read, a back and forth between a person who was questioning the motives of the Perth Mint, and they did point out in their own defense that they do not set a mint limitation for the larger ones. So you've got the 2 ounce here, which is very interesting that you can see the 2 ounce is $88. We're going to go over to Gainesville and look at it later, but $88 for the 2 ounce, and you've got your 1 ounce at 75. So that's kind of an interesting anomaly there. And you've got your larger coins. You've got your 5 ounce and your 10 ounce, and there's a kilo coin here, which is 32 ounces, and there's actually a 10 kilo coin, which is 321 ounces. Now, Perth has said that they did not limit any of these coins. You can see there's 4 of those 10 kilos, and there's 85 of those 1 kilo. So in Perth's defense, they're claiming that they only are limiting the 1 ounce because of the numismatics. The reason why I jumped on the 1/2 ounce is because in my past experience, I picked up a number of the 1/2 ounce Tigers when they were still available, and a lot of the 1/2 ounce, some of the 1/2 ounce actually end up matching the price on the 1 ounce. So I thought that was a really good deal. So we're going to keep an eye on that one. I got in at 22.72, and we were dropping this morning, and I just had the feeling it's time to pull the trigger. Not that I can't add to this position if there are any left, but I was kind of thinking this is a decent price for them. So let's go to the main story. Actually, I wanted to pull out and get the larger view before we do that. The 30-minute chart was the chart we were looking at, and we were just drawing from this point down. So you can see that we're still at that 32.25 area. It's going to be a break to the upside. We definitely have a spike type bottom formation here. I definitely didn't bottom ticket, but I may have come close. We'll have to wait and see. So I wanted to start taking one viewer question every night, and because of the importance of this question, it's going to take up the rest of the video. But this is from the forum. If you want to go to the forum, you can just go to the Silver for the People blog, and I'll show you that real quick. You can go to the Silver for the People blog and then just click on the link for the forum, and that will take you there. But the question for tonight is hard landing in China and the silver price. You mentioned in one of your videos that a lot of the push behind the higher silver price will come from China and its push for high-tech and green technology. I've also been reading Stephen Lieb's book, Red Alert. Now I'm hearing that China may be going through a housing bubble, whole cities built with almost no one in them. If the bubble bursts and China and the world economy slow, would that not mean lower demand and prices, at least in the short to midterm, for silver and other precious metals? So that's an excellent question. Now, for the longest time, for at least the last 10 years, I have been consistently trying to counter what I term the China bashers, and it's not that I'm a big China supporter. I'm certainly not a big supporter of communist China and the government and the things they've done there, but just the raw economic numbers are something that I think that people just aren't really looking at the numbers. So I wanted to take a look at the numbers. First of all, just anecdotally, as far as the real estate market goes, if you remember, Jimmy Rogers has recently commented that, I don't know if this is accurate. I'm taking Jimmy Rogers' word on it, but he said that in China currently, to buy a house, you have to put up 40% in cash of the value to get the loan. So if that's the case, that would actually be more of a stringent requirement than the United States has ever had, even during its most responsible times. I think in the United States during the 70s, 60s, 70s, and maybe early 80s, you could put up 20% of the value of a house and then get the loan. And of course, the reasoning behind that is very rational, in that you have a person locked in. They have a vested interest in continuing to make payments because they've already sunk a certain amount of money into the house. So if that's true, if Jimmy Rogers is correct, that China is up to today still requires a 40% down payment of the value of the house, of course, that would mean that the real estate market in China is the furthest thing from a bubble that could be possible. Now, as far as building whole cities and populating them, well, China's been doing that for a long time. China builds a city of 1 million people, something like one every month, or some ridiculous number. They've been doing that for a large number of years. But I just wanted to take a look at the raw numbers, because a lot of people bandy opinions about, and they really don't have the facts to back them. Now, of course, there are going to be people who are going to question the figures, and that's legitimate. I would say that there's at least a even chance that the figures coming out of the U.S. government are more bogus or as bogus as the figures coming out of the Chinese government. My guess is that the figures coming out of the Chinese government are actually much more realistic and accurate than the ones coming out of the United States. So let's start with we're going to start with the United States, and then we're going to jump over to China and take a look. This is, of course, trading economics, and they have a lot of statistics for all the different countries. And this is United States government debt to GDP. So you can see we're at 93%. Now, actually, I pointed out recently that we crossed over the 100% mark. So this is dated. This doesn't have this year. We're actually above 100%, which is a critical point that we just have way too much debt. So let's look at some of the charts before we jump over to China. We've got the interest rate in the United States, which you can see is flatlined. We've got the GDP growth rate in the United States, which I don't buy these figures, but if we calculate the inflation rate in, you can see they're reporting a 3% inflation rate. I don't buy that. And industrial production is a little bit harder to lie about, and you can see that we've supposedly recovered. So let's jump over to China and take a look at some of these figures that compare to the United States. And I think you'll see what I'm talking about. So the first thing we want to look at is the government debt to GDP. And you can see that the government debt to GDP in China right now is 17.7%. So actually less than 1/5 of the government debt to GDP in the United States. Now, another very interesting figure is the interest rate. If you remember, in the United States, we were flatlined at 0. You can see we've got an interest rate all the way up at 6.5%. So we've got a economy growing very rapidly, continuing to grow very rapidly, and we'll pull up the GDP growth rate and show you that. Actually, that is the recent change, and that's a percentage. So I want to look at instead the GDP per capita, and you can see that's a better indicator. You can see that the 2008 recession that was experienced in the United States, there's no corollary in China. This GDP per capita, probably a better one is going to be the purchasing power parity comparison. You can see from 2000 or so, we're at about 3,000. We've more than doubled. If you pull the chart way back, China is just on a continuing upward spike. So the key indicators now, we can look at the inflation rate. You can see the inflation rate is dropping in China, but it's very important to understand that if you have an inflation rate of 3 or so percent, but your interest rate is 6.5%, that means you have a positive yield on debt. And so adding all these figures together, of course, we want to look at industrial production. You can see that industrial production has really not even dipped below 10% recently. The big dip was with the decline in the financial crisis in the West, where China's industrial production actually decreased to a 5% year-over-year increase. So that was the crash, and they're predicting another crash, and I just think that's a bunch of nonsense. So retail sales are steady. Pretty much everything, the currency has continued to strengthen. The currency, the Chinese yuan or renminbi, has just continued to strengthen against the dollar over time. That's to be expected. So Pretty much every economic indicator that you look at in China shows you that China is far more responsible economically than the U.S. Treasury, the U.S. Fed, and of course the U.S. Congress. So, back to the question, I really don't put any stock in the China bashers. I've disagreed with them for 10 years running. I'm sure I will disagree with them for the next 10 years running, and I'm virtually certain that they will be wrong for the next 10 years running. Jimmy Rogers has said that China is a growth story for the next 100 years, just as the United States was a 100-year growth story, and so was England before it. So I don't see any validity to the criticisms of China. I just don't think there's any connection. And of course, the big argument that's always thrown out by what I would call every China shill in the book is that what is China going to do when we stop buying their goods? Well, frankly, that's just a stupid argument because China has been loaning us the money to buy their manufactured goods. And if they've been loaning us the money to buy them, then it doesn't even make any sense why they couldn't loan the money to someone else or they couldn't loan the money internally. If they're loaning money for their manufacturing items to be purchased, they could loan that to anyone. They could loan it to Brazil, they could loan it to Africa, they could loan it to Japan, they could loan it to anyone they wanted to. So I really don't see any validity in any of the arguments that are made against China. And of course, for the last 10 years running, these arguments have been proven wrong, and I fully expect that for the next 10 years they will be proven wrong. So let's go over to Gainesville coins, and I wanted to look at some of the buys over there. Now you can see this same Perth Mint half ounce coin is over there at 23.83. I don't know how much they have left because they don't really report those. You can see the next coin up is the Rabbit, and we've got the 1 ounce Perth Mint Dragon at 81.66, and we've got the 2 ounce Perth Mint Dragon at 87.33. So that is a fantastic anomaly in the market. I can't tell you why that is. I know that the 1 ounce has a limited number. I believe it's 500,000. Correct me if I'm wrong. And the Perth Mint has stated that all of the others, including this 2 ounce and the half ounce, have unlimited mintage, and that's going to be based on the pre-order number. So that may account for that, but as far as the 2 ounce and the half ounce, I really can't see how you can go wrong. This is a very important coin symbolically for China. If we go into the design, of course, the Year of the Dragon, I believe, correct me if I'm wrong, the Chinese cycle is in 12 years, the animals cycle through. Now, of course, the year 2012 is a very key year. If you studied all of the prophecies of all the different cultures and all this stuff, the year of 2012 is the year where the Ouroboros occurs. That is simply the point where the galactic center of this galaxy reaches the central point. So when you view out, you have this point where this symbology that you have, it's not clear on this coin, but in many other ancient symbols it's clear. You have the snake swallowing its tail. If you look out and look at the picture of galactic central point, which is going to cross, I believe, at December 21st of this year, that's where it centers exactly. You have that point where the snake is swallowing its tail. If you look at this Chinese dragon symbol, you can see you've got some type of sun symbol here and apparently a mouth type symbol and a tail. So this somewhat symbolizes that 2012 Ouroboros prophecy of the many cultures, and it's interesting that the dragon falls on the year of 2012. That would align the Mayan and Chinese and all of the other ancient culture prophecies. So, just for that reason alone, I think that these dragon coins from 2012 will probably end up drawing a tremendous investment interest in China. Of course, the Perthment issue is is unsurpassed as far as quality. There really is no comparison. When you buy a Perthment coin, you get the coin in a plastic capsule. The coin is not rattled against other coins. I don't know what the MS is. Probably all the coins are MS70, and you don't even need to get a PCGS rating, but I'm just guessing on that. So I'm really banking on this coin, and like I said, I picked up some today with the silver price dipping where it was, and I may pick up some more if they're available. And I can't say enough about this coin. I think it has tremendous potential, but again, that's just my opinion, and I don't give investment advice. So we'll talk to you next time.